let's just do a review of Chapter 5. In 5, we continued with the worksheet by recording the adjusting entries in the journal. Now, when we prepared the worksheet, we made all of our accounts current. If you're working on something, you need to turn your monitor off or minimize so that you're paying attention. Some of you really need to listen to the review. It's just a summary of what we did. On the worksheet, we made those accounts current by the adjustments, and then we did the 2 financial statements. But those accounts are not current in the ledger. They're just current on the worksheet. So from the worksheet, we need to record the adjusting entries in the journal. And they do not need a description underneath each one of these, because we can use a heading up at the top that just says adjusting entries. Let's see if I can make it a little bigger. It's usually not on page 1, and the worksheets that I gave you the other day, I had changed it to page 2. We usually put the adjusting entries and the closing entries on a new page. So when we're posting this, what would our reference be in the ledger? GJ2. Okay, it's just page 2. And we're only using the general journal in this edition of Jeffrey Slater's book. There are special journals that we can use, and we'll use special journals when we use Peachtree. Those of you that are doing accounting at work, are you using special journals? Or are you recording everything in a general journal? Anybody? General journal is good, but everything's just all in there together. You've got to post it to the individual ledger accounts to be able to see what those true balances are. Have we posted these adjusting entries?
No.
How do we know that? We don't have anything here because that's our last step when we're posting. We've posted these, haven't we?
Oh, yeah, we did.
And all I did was the account numbers are there. When you're posting, you're taking the information from the journal, putting it in the ledger. How many steps?
5.
5. The date, the page number, the amount, calculate the new balance, and I noticed on some of your homework problems, you weren't calculating a balance. You have a $500 entry as a debit, then you have a $200 entry as a debit. What is your balance? 700 on the debit side. If you have a debit and a credit, you need to subtract and then put it where the number was the largest number. Usually in the ledger, the ending balance ends up on the normal balance side, but sometimes it doesn't. In the cash account, it always doesn't. It depends on which order you're posting. If you post payments before you post a deposit, you could be on the credit side in the cash, and in one of our homework problems, you are on the credit side in the cash. That just means we don't have the true funds in that account. Something hasn't been processed yet. Remember Mitchell Sales, the hardware company where I worked. He wrote the checks, but we couldn't cash them until he went to collect the funds. The next part that we have to do to bring those accounts current is to do the closing entries. And why do we have to do closing entries?
To reset all the temporary accounts to 0 for the
That's
next
it.
accounting cycle.
We're resetting all of those temporary accounts to a 0. Oh, I guess I only have the one where we've posted it. Maybe I didn't write it where it wasn't posted. But these closing entries have been posted already. And we have 4 closing entries. You can get the numbers from the ledger, or you can get the numbers from the worksheet. They're all there. The first one we're going to do is to close revenue. The second one is to close expenses. I like for you to post those 2 first, because then we know what kind of a balance we have in the income summary. Income summary has a normal balance on what side?
On a credit.
On the neither side.
And there's no normal balance.
It doesn't have a normal balance. So it can have either a debit balance or a credit balance. And we have to think about, if I draw this on the board, people at home can't see that. Maybe they can see it here. All right, if we have capital and we're closing the income summary, capital's normal balance is on what side? On the credit. So it's on this side. So if we close income summary with a debit to income summary and a credit to capital, do we have a net income or a net loss?
Income.
A net income. If we close income summary with a debit to capital and a credit to income summary, we have a net loss. So I think it's easier to post these two and then go back and look at your income summary, because you have a credit to income summary in the first one and a debit to income summary in this one. It should equal the amount that you have as net income. And where can we check the net income? Where can we check it?
You can subtract your expense balance from your earnings.
But where else can we find
On
it?
your worksheet.
On the worksheet.
Yes.
And we have it on the worksheet. So we can go back and check that. We already calculated what the net income was. This is doing what our statement of owner's equity did on paper. But we never made the capital current. We knew what the ending capital was for the fiscal period and the beginning of the next fiscal period, but we never adjusted it. It was never current. It was just on paper. This is doing what our statement of owner's equity has been doing since chapter 1. Revenue, expenses into income summary. All that's left is net income or net loss. Think about what's happening to capital, whether that's an increase or decrease. And my questions on the test will be that way. If we have a credit to capital when we're closing income summary, is that a net income or net loss? A credit to capital, a net income. So would it hurt to draw the T accounts on the test? You've got plenty of space on that test. Write it out, process it. Don't just guess. You know what the answer is, because you should know where the normal balance is for capital. That went back to the first day. Assets equals what? The accounting equation. Assets equals
liability plus owner equity.
plus owner's equity. So it's on the credit side. It's on the right side of that equal sign. Assets were on the left. That's our rule for everything, because we always want to keep that accounting equation in balance. Then we have two more closing entries. And again, I would post these two first and then close the close the income summary to the capital. Income summary does not have a normal balance. So if it has a debit balance, we need to close it with a credit. If it has a credit balance, we need to close it with a debit. Here we had to close it with a debit, and we closed it to the capital. Right? The last closing entry we have to do is our withdrawal. It is a contra capital account. It's always going to reduce the amount that's in the capital account. And when we close it, then we can compare what the owner took out this month with what the owner is taking out next month. Or this October from last year's October. We could compare. Now, some owners may not take a salary. They may just take a draw on the account, a withdrawal. So we want to keep track of that. But we also want to reduce their capital amount with that withdrawal. So there's 4 closing entries that we did. The first one is to close revenue.
Income summary.
The second one is to close all of the expenses. And we can get those from the worksheet. You can also get this total from the worksheet, can't you?
Yeah.
Because it's on the worksheet. So you have several places where you can go back and check. Then we're going to post those first two. The third closing entry will be to close
The income summary.
income summary, and then the last one to close
Withdrawals.
withdrawal. Are we closing capital?
No. Not
But
yet.
we are adjusting capital with several transactions, aren't we? We're adding either the net income or subtracting the net loss, and we're subtracting the withdrawal. Is it making a little bit of sense about what we're doing in that entire accounting cycle? Because we're right back to where we were on the first day.
Yes, now I have.
We only have those basic accounts. Remember, we didn't have any expenses when we did the first financial statements that we were preparing. We only had that simple accounting equation. Assets equals liabilities plus owner's equity. We're right back to that. We're ready to start the process all over again, and we can compare. We can compare apples to apples, October to October, January to January, 2014 to 2013. We can compare. Right? It's a lot of work to go through that entire accounting cycle, and you get to do it 2 times in Sullivan. So you'll see that whole process. You get to do 2 worksheets, and I think it gives you a little practice on, oh yeah, that really makes sense now, because when we get ready to do July, you'll see that we're right back to those basic accounts. What do we call those accounts that are left?
Permanent,
Permanent accounts. What was another word for it?
real,
Real. Okay. What did we call the temporary accounts?
normal.
Nominal accounts. And those are the ICE accounts. We don't have any of the C accounts yet, and we won't until chapter 11, I think, is when we get one of our cost accounts. Before we're ready to go to the next month, or the next year, or the next quarter, we're going to prepare a post-closing trial balance. It's everything that's left that still has a balance. We shouldn't have any expenses on there. We shouldn't have any revenue. It's just our basic accounts. And our debits and credits should equal. It's just an informal statement. It doesn't need dollar signs. I'm not going to take off if you have dollar signs, but it's just it's like a continuation of the worksheet. This could have been 2 more columns on the worksheet, couldn't it? Because Isaac just bought, I don't know where he got it, Isaac, but he bought, because he couldn't find his worksheets, but look how many columns are on this. We could have put the post-closing trial balance on here, couldn't we? So it just could have continued. Then we'd have a worksheet of everything that we did at the end of the quarter, the end of the month, the end of the year. This is it. This is real. He said it was easier because the colors
Because of the
were on
color
there.
code, yeah.
Yeah.
I find it easier.
You know, ours isn't like that. But this is what accountants do. This is the worksheets that they use. Now remember, a worksheet is considered just a piece of scrap paper. It's nothing formal, but boy, does it ever give you a chance to make sure that things are correct before you go into the next fiscal period. Any questions about what we covered in chapter 5? I like the worksheet. I think it's easy to do.
I know. I had a question on Sullivan. You have cash and equipment on one line. Is cash is 9,000 and equipment is 4,000, and is that equal?
Compound.
It takes 3 lines.
Okay.
Actually 4 lines because you have a description.
So the 4,000 that is on office equipment only goes on the office ledger. I mean, not the.
What would that transaction look like if we had, it was the initial journal entry, wasn't it?
Yeah.
Yeah.
Okay, let me see if I have it. I think I brought that back in here. The question was the first entry that we had in Sullivan, which was the initial investment. Oh, maybe I didn't bring it in here, but it's on my key. Let me finish answering this question because we're still recording, okay? All right, here's the initial investment of the owner for Sullivan, and we did this one in class. It's a compound entry. I wouldn't make it 2 entries. It was just the investment. The owner gave cash, and the owner also gave office equipment. The owner could have given a vehicle, could have given supplies. It's all the same transaction. Whatever the owner gave to the company to get it started, that's the amount of rights that they have to the asset part of the business. The owner invested that, so that's giving them the right to all of that money, the $13,000 in that business. This is what they have invested in the company, $13,000. It's a compound entry. Don't make it 2, make it 1, and then your explanation doesn't have to be stair-step like that. It could just go over to the left. Initial investment.
So 9,000 go to cash, 4,000 go to office equipment,
When you post it.
and 13,000 goes to capital.
Right. You've got 3 accounts that you're posting in that journal entry. And remember, that's the last step. We know that we've posted this because the post reference has the account number in it. Don't put the post reference number in until you actually carry it over to the ledger. All right, Maria, what was your question about Sullivan?
Oh, no, sorry, it's about the yes.
About the demo problem that we did?
Yes,
Was it on the last page?
yes, in the place for the hospital,
The post-closing trial balance?
Yes.
All right, let's look at that. Where do we get these numbers from? We really can't get those from the worksheet,
The
can we?
ledgers.
We have to go to the ledger. And when we're closing accounts, I'm going to draw it right here. Let's say this is the ledger, the debit and credit on the ledger. We're going to draw a line like that when it's a 0. Don't just put a 0, because someone that's looking at that might say, they left something off. No, we didn't. It went to a 0. So when we get to a 0 balance, that's how we're going to indicate that it's a 0. Draw it in the debit and the credit. And then the only accounts that we have on the post-closing trial balance are the ones that still had a balance. So when you finish posting the adjusting and the closing entries, this should be all that's left. Did that answer the question, Maria?
my question is in the accumulated depreciation office.
Okay.
Can I keep on it? Because there is 150 the office equipment.
Well, this number will never change, the office equipment. That's called the historical cost, the original cost of whatever that equipment was. Say it was a computer, I don't know, maybe it was a printer for $150, could have been a printer. But we're going to depreciate that, and we decided that we were going to depreciate it, I don't remember how much, but this is January, so it must have been $20 a month. I'm just assuming, because this was a new company. If we want to know the value of that printer, we'll subtract the accumulated depreciation from this, and what's the book value of that printer?
130.
130. This number doesn't ever change. It could have been a vehicle, automobile. I mean, it could have been anything that has a long life to it. What kind of an account is this one? Accumulated depreciation office equipment,
This one's asset.
contra asset. Okay. Good questions. All right. We still have about an hour. Let's work on Sullivan, or if you need to work on your accounting tutors. We don't always get the extra lab time, and you can use the lab time in here to do those tutors, because those are the one thing that you have to do in this room. But you can also work on Sullivan. And let me check, do a few transactions, let me check those before you start posting, and then before you start your worksheet.